I follow one strategy on one type of asset with very specific rules for when I enter, how I size, and when I exit. Today, I am going to break down exactly what that strategy is using real numbers from my real portfolio. What's up, everyone? Transparent Theta guy here. If you have been watching my daily updates, you have seen me talk about put trade spreads a lot. Today, I want to step back and explain the whole system from scratch. What it is, why I use it, how I pick my trades, and exactly what numbers I'm targeting. Let's get into it. A put credit spread is when you sell one put option and buy another put option at a lower strike price, both on the same stock or index, both with the same expiration date. The one you sell brings in money, that's your credit. The one you buy costs a little money, that's your protection. The difference is what you keep as a profit if the trade goes your way. Let me show you a real example. On XSP right now, if I sell 710 put and buy 700 put, that's a $10 wide spread. My maximum risk is $1,000 and my maximum profit is whatever credit I collected. For me, the target is between 120 and $160 per spread. That's roughly 12 to 16% of the collateral per trade. Now, here is something really important. I almost exclusively trade indexes. XSP, which tracks the S&P 500, or QQQ, which tracks the Nasdaq. Why? Because indexes don't go to zero overnight. A single stock can drop 30, 40, 50% on one bad earnings report, one piece of news, one surprise announcement. You have seen me talk about Visa this week. One crypto related headline and Visa jumped $10 in a day. That's the risk of individual stocks. An index like XSP is 500 companies combined. For that to move the same way the entire market has to move, it still happens, but it's far less likely and far more predictable. That predictability is what makes this strategy work. Okay, so now how do I actually pick which strikes to sell? Two things, Delta and RSI. So, Delta first. I look for a short strike with a delta around 20. Delta of 20 means the market is pricing in roughly a 20% chance of the stock reaching the strike. That means an 80% chance it doesn't. I like the odds. Now RSI. RSI is a momentum indicator that tells you whether something is oversold or overbought. I look for RSI somewhere between 30 and 50 before I open a put credit spread. That tells me the index has pulled back a little or at least neutral. I am not selling puts when RSI is already at 70 or 80 and the market is running hot. That's when I have the least edge. Next, how far out I would go. I open my spreads between 30 and 45 days to expiration. This is the sweet spot that backtesting consistently shows gives you the best balance between premium collected and the theta decayed. Too close to expiration and the premium is tiny. Too far out and the theta decay is too slow to work for you. So 30 to 45 days is the zone. And when do I close? Simple. 50% profit or I hit my max loss threshold. If I collected $140, I close when it drops to $70 in value. Why 50%? Because backtesting shows that waiting for 100% takes almost as long but adds significant more risk. Take the 50%, reset, open a new trade, rinse and repeat. Now, I mostly sell puts, but occasionally I look at call credit spreads as well. And I mean occasionally. The only time I consider a call credit spread is when a stock or index is a near strong resistance level or close to all-time highs. The idea being that it has hard time breaking through. But here is the honest truth. Visa taught me that even near resistance, one piece of unexpected news and the stock blows right through it. So I'm extremely cautious with call credit spreads now. Indexes only, strong technical resistance, and a much smaller position size. So that's the full system. Index ETFs only, XSP and QQQ primarily, 20 delta short strike, RSI between 30 and 50, 30 to 45 days to expiration, target 120 to $160 per spread on $1,000 of collateral. Close at 50% profit, cut the loss if it goes against me. That's it. Simple rules, consistent execution, real money. If you want to follow the journey, hit subscribe. I post daily updates every time the market is open. See you tomorrow.